Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. The EV industry deserves a higher P ratio than ICE, and I'll tell you why. For starters, I'm not talking about some of these crazy EV startup valuations with really high P ratios, for example like Rivian and... none of them make profits yet. Well, none of these other Chinese EVs like NIO... again, no profit. Oh well, I guess we would imagine the market will be kind enough to give these companies a PE ratio of something like 200 when they're finally up to a few 100,000 deliveries a year perhaps, if they were making a profit of course. Obviously this is all highly hypothetical. Anyway, my point is that a high PE ratio of about 200 or so, similar to what Tesla used to have, was more to do with the growth it had yet to go, not because it was an EV business. But say for example Tesla filled out its growth and met its demand for its cars. And let's forget about the other sides of the Tesla business, including FSD. Keep it solely as a car business, or more importantly, an EV business. Well, if Tesla's market share had matured, then I would still place a PE ratio of about 30 on it. In fact, if any other EV companies had also matured, I would give them a PE ratio of around 20 or 25 or so too. I think that will be the accepted value of EV companies. By comparison, in the ICE auto industry, GM is currently sporting a PE ratio of around 6.5, Volkswagen 4.6, and Toyota manages a 9. So I'm suggesting a big discrepancy between the PE ratio of the ICE auto industry and the PE ratio of the EV industry. This is a lot higher PE of the ICE industry, by about 3 times. Why, even if there's no more growth in sales or market share? Well, there are reasons. Just to be clear, I guess we should really say the idea of an EV business model, assuming others can one day reach it, other than just Tesla. The prices of EVs have been set at price points acceptable enough to consumers to meet the supply. Of course, consumer demand is rising quickly too, but it doesn't really matter what you set the price of your product if you don't factor in costs. Outside of Tesla, just about all EVs are sold at a loss. But like I said, the price point is set. So now these companies just need to work out how to get costs down. It's still very early days of EVs. Well, not just EVs, but batteries too. There's still a lot of cost to come down in batteries, and will do for some time. There'll be breakthroughs, new chemistries, form factors, and a variety of different batteries catered to specific applications. Obviously then, the cost of batteries will reduce significantly over time. We've already estimated the huge drop in prices that the 4680 batteries will see, implying we know it's possible. Other elements will be refined, motors, powertrains, and software. It doesn't take much of an improvement in efficiencies to make a big difference compared to where we are today. I mean, they're only going to get better. In addition to that, the EV industry has leapfrogged legacy systems such as car dealer networks. This means EVs are able to absorb that much more margin, as they don't have to share any profit with the car dealer, which is kind of essential when you need to do everything you can in order to increase profit margin. For this reason, I would place a lower PE ratio on any legacy auto EV companies. Unions are also a similar issue and add cost to every vehicle, again holding back legacy, but giving more opportunity to EV startups to make a profit. And one of the major reasons the EV industry should have a higher PE is, well, they can be quite profitable. With a decent margin on a high capital good, there's a lot of profit to be made if you can sell in high numbers. ICE autos make very little profit on the sale, at least to the manufacturer. The legacy companies make their profits in parts, servicing and finance. To all of a sudden receive an extra $5,000 profit per sale of the car instantly is valuable. Eventually, some of these other EV manufacturers may ramp up production more and hit more economies of scale. Battery prices come down, EV prices rise, powertrain efficiencies and software improvements, etc. And perhaps some of these EV companies could make a profit. Maybe, but I don't know how many of them can even last that long. Rivian and Lucid are both going to exhaust their burn rate long before they break even. They do both have 2 very large potential backers though to see them through if possible, or more likely to buy them out at pennies on the dollar in Chapter 11. Ford looks more likely to make a profitable EV sooner than these 2 companies. Now, when you're talking thousands of dollars of profit on potentially a few million sales a year, it does add up. And then when you add this higher PE ratio, then you get some really high valuations. For example, $5,000 net profit per vehicle at a PE ratio of 25 with 1 million sales comes to a valuation of $125 billion. Therefore, it's all about getting costs down. If some new battery technology could save the cost of every electric vehicle $1,000 and you sell $2 million a year, that is $2 billion more profit, or $50 billion valuation with a PE 25. We are still so early in the game, and there are still so many more ways to get costs down, especially for companies that are not Tesla. Of course, these other EV companies have to get their costs down quite a bit just to break even still, let alone actually make $5,000 profit. But there's the chance they can also raise their prices. If you raise your price by $5,000, then that's also $5,000 more profit. Yeah, it is really, really tough running an EV company without Elon Musk behind it. But then this should be obvious to the battery companies too. If a battery company came up with a new design battery that is lower cost and more energy dense, then every $1,000 saved per vehicle is worth $25 billion to every EV company that sells 1 million units a year. There's only one EV company in the world on that current rate though, but you get the point. You get the point as to just how valuable lower cost batteries will be. Thus the research and development will be more than justified. Of course, imagine when there are 50 million EVs selling a year, and we have reduced battery costs by $5,000. Do you want me to tell you what those numbers come to? Well, it would save $250 billion a year. But if you're saving that much with a PE ratio of 25, then that's $6.25 trillion. That isn't really a number I can attach to much, other than just giving you an indicative idea of how much money is to be made in batteries and how valuable lower cost, more energy dense batteries are. Of course, all EV companies ride that potential lottery ticket too, of the AV industry. Autonomy is barely being priced into anything. The market struggles enough to value Tesla just as a car company. It can't come close to figuring out how to value FSD on top of that. Yeah, believe it or not, the biggest future of Tesla's potential is not yet priced into the stock price. I think I worked out it was about 5 to 10% of the value of the company in a video I made once. As people believe and understand FSD and autonomy more, and it progresses, then eventually the AV PE ratio will go through the roof. And sure, you can have autonomy on ICE, but ICE isn't going to work for robotaxis, and Elon may not license it to ICE cars anyway. And it is up to Elon, as no one else will have autonomy soon, or ever. Anyway, more reasons for the EV industry to have a bigger future than ICE, and thus warrant a higher PE. Anyway, I've been saying EV companies this time, and I do mean that. EV companies, not legacy auto companies. As another reason the PE ratio is higher is because there are no unions, car dealerships, and advertising. They have leapfrogged those. Yeah, sorry legacy, these high PE ratios do not include you. And I will explain why. Well, except for Ford maybe, if they can get out of all their obligations and set up their new EV company. If your product has higher margin, then you have more buffer room, which means you can reduce prices to meet demand and still make a profit. So if demand ever does start to drop, maybe due to a down market or something, then prices can be reduced, but there are still profits. If Tesla had a 15% net profit margin and other EVs had just 5%, well, what happens when you have to reduce prices more than 5%? Tesla make 10% profit still, everyone else is making losses. This is valuable, which is actually another major reason Tesla deserve a higher PE ratio than all other EVs. But as for ICE, well, they don't even have anything close to that sort of profit margin. They would have to take on large losses. Similar to how the Middle East can get a barrel of oil out of the ground for something like $5, compared to others at around $50. If the price of oil drops to $30, the Middle East still makes a profit. EVs are more in tune with technology, have larger screens, obviously larger batteries, and are more of a digital experience than an ICE car. More of the car will be oriented and controlled around software. This means EVs can upsell subscription services or software upgrades, just like how you can with Tesla. This is additional income that was not easily tapped into with ICE vehicles. Again, adding more potential to the company and thus improving PE ratios. And there is still so much more EV technology to come. We're still very early in the adoption stage. Trillions more dollars to be spent. Batteries are still very expensive and scarce. All other components. I think we'll see the EV industry branch off into components like the ICE industry did. They'll likely end up being companies specializing in powertrains, electric motors, and obviously more batteries. This will create economies of scale and save OPEX for the EV companies. It should mean that they get a better, e.g. motor, at a lower price, but so does all the competition. Anyway, as usual, it's all moot until any of these EVs can actually make a profit or hit volume production, as currently they're all sporting negative PEs, for their BE business at least. Yes, even BYD. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.